Hello and welcome to RC Truth Media. Today we are going to speak about a couple of articles that I had just seen, just got released on Zero Hedge, having to do with the failure in the banking system and recent tariffs China just did on us. We all know about the tariffs that we did on China, right? $50 billion worth of tariffs. Well, China strikes back and retaliates with $50 billion worth of tariffs on us. So the same amount of tariffs that we did on them, they do to us. So far, it doesn't look like they are liking this one bit. It doesn't look like they're going to accept it. And this is the start of a trade war. Okay, so we are currently in a trade war with China. This is punch one and punch two. We punched them, they punched us back, and now we're going to wait on Trump to see what his next move is going to be. It says, just as China promised, they have responded immediately to President Trump's very big tariffs and just unveiled $50 billion in tariffs against U.S. goods, including soybeans, light aircraft, orange juice, whiskey, and beef, starting July 6th. So literally within a day, they retaliate. Okay, they are very much the strongest nation in the world. Okay, we come number two. Even though we do have the world reserve currency system, they now have the petro yuan. Okay, China is taking the place of the U.S. world reserve. We have the petrodollar. Now the petro yuan is already here. So it's only a matter of time, I believe, for China as the world power. They already have the Belt and Road Initiative. There's a $500 billion that we owe them each year. So they are growing their economy year after year. They're allowed to have a lot more credit than us. You know, they're actually they're expanding their liquidity in their credit markets, and we are cutting back our liquidity. Okay, so let's read the rest of this article. It says on June 15th, which is today, the U.S. government issued a list of goods subject to tariffs, which will impose a tariff of 25% on about $15 billion worth of U.S. goods imported from China, of which about 34 billion will be goods from July 6, 2018. It began to impose tariffs and began to solicit public opinions on about 16 billion US dollars in tariffs. The US measures violated the relevant rules of the World Trade Organization and is contrary to the consensus reached in the Sino-US negotiations. They say that we seriously violated their legitimate right and interest and threatened the interest of their country and people. Well, I really don't believe who entered us into the agreement of $500 billion a year in debt to them when we feed the world over here. United States feeds the world. Okay, California, we grow the world's vegetables and fruits. Without California, they would be hurt. And so, not just California though, the East Coast has a lot of wheat, oranges in Florida, things like that. Yeah, they have a little bit of stuff over there, but has anybody seen Beijing and how the air looks over there? Pretty bad. Real bad. Anyway, according to the Republic of China's foreign trade law, the People's Republic of China import and export tariff regulations and other laws and regulations and the basic principles of international law. The State Council Tariff Commission decided to impose an additional 25% on 659 items of U.S. 50 billion imported goods originated in the United States. Tariffs included 545 items of approximately $34 billion in goods have been subject to additional tariffs since July 6, 18, and the implementation time of additional tariffs on other commodities has been announced separately. Okay, so if we go to list 1 and list 2, you can see what the items are. Well, yeah, we can't see nothing there. Let's just go ahead and go back. Okay. The response from China signaled a rapid escalation of dispute. China will impose tariffs with equal scale, equal intensity on imports from the U.S., and all of the country's earlier trade commitments are now off the table. the Commerce Ministry said in a statement on its website late Friday. This is exactly what Goldman Sachs was worried about. We expect a minimal effect on growth and consumer price inflation from the tariffs if implemented, but the announcement raises the odds that additional restrictions will be proposed over coming months. So, this has just started a trade war, but something had to be done. We couldn't just go on and let them have $500 billion in what we owe them that much every year. You know, it's not right for us to be paying them that much every year. Um, we're going in debt $500 billion a year. It's just not right. Right here, it says some of the most systemically important banks in the world are tumbling. Since the Federal Reserve hiked rates, the big U.S. banks have dramatically underperformed small U.S. banks, continuing a trend that has been going on since February. Okay, so this right here is a chart, the SIFIS chart, which is systemically important financial institutions. Okay, meaning the most important institutions in the world. 39 of them. These are the 16 in bear market territory. Deutsche Bank, Nordea, ICBC, Unicredit. Some others that we've heard of is Agricultural Bank of China, Bank of China, Credit Suisse. Okay, it says right here. At some point, central bankers will have to respond to bearish signals from almost half the global SIFIS, rather than continuing to tighten monetary policy. If these banks are supposed to be systemically important, then policymakers ought to be watching them to see what is happening. Synchronized dips were a sign of global financial stress. Okay. At the same time, the credit risk of some of the largest banks in the world has been rising significantly. This is the credit risk. So as we have the most significant banks in the world now in bear market territory, down by 20%. What else is happening? Credit risk is going up. Okay, so at the same time, what's happening to the S&P 100? It's going down as well. We can see this too. It says right here, what many of the harder hit banks have in common was a heavy dependence on U.S. dollar funding, putting them at risk of a squeeze if U.S. rates continue to rise and the dollar continues to strengthen. Banks in Canada, Australia, and Sweden in particular came through the last crisis in relatively good shape, thanks largely to their exposures to China and a strong commodities market. But in years since then, the banks had overextended, he said, trying to support rapid asset growth with wholesale funding rather than traditional deposits. Absolutely. The good news does not last forever. Those kind of comments are usually just before things start heading down. Sooner or later, Powell is going to get the tap on the shoulder from his real bosses, and judging by the collapse of many of the SIFIs, it's soon. That's right. What is FISIs again? I can't say that right, sorry. Systemically important financial institutions. Now, most of them, including Deutsche Bank, are now in bear market territory. Look at this right here. Going downhill. All of the gains since last year are now gone. Okay, so plus what happened with China today, something's going to happen. I'd say go ahead and get you some gold and silver. Look into the cryptocurrencies because it's a great time to buy. Thanks a lot for coming to my channel. I hope you got something out of it. Please like and subscribe. Donate. I'll leave the link below so you can donate. Have a great day.